When the world's largest asset manager adds over 160 million in Bitcoin, quietly, without press, without fanfare, you have to ask yourself, what do they know that we don't? This isn't a meme coin, a bull trap, or a retail-driven rally. This is the biggest name in global finance, BlackRock, making a surgical move into an asset with a fixed supply. So the real question is, are they front-running something or simply executing client flows? Let's unpack what just happened, why it matters, and what it signals about the next phase of Bitcoin's institutional era. BlackRock's iShares Bitcoin Trust, ticker symbol IBIT, has quietly become the most dominant force in U.S. spot crypto ETFs. As of this week, IBIT controls over 700,000 BTC. That's more than half of all Bitcoin held by U.S. ETFs. But it's not just the size that matters, it's the pace. Just in the last 2 sessions, they bought 1,388 BTC, valued at $164.6 million. That's equivalent to absorbing 4 full days of miner issuance in just 48 hours. And this isn't a one-off. Since launch in January, IBIT has only had 7 net outflow days. The rest were steady accumulations. This kind of consistency isn't typical for speculative flows. It smells like mandate-driven positioning, possibly pensions, endowments, or sovereign allocators. Revenue signal and TradFi shift. Here's something most crypto traders missed. According to recent fund data, IBIT has now surpassed IVV, BlackRock's flagship S&P 500 ETF, in daily fee revenue. That's right, more clients are willing to pay BlackRock to hold Bitcoin than to track America's 500 biggest companies. This marks a shift in investor priorities. Bitcoin is no longer a fringe allocation. It's becoming a serious line item in multi-asset portfolios, not for moonshots, but for long-duration asymmetry. When fee revenue tilts, BlackRock reallocates attention. IBIT is no longer experimental. It's now a product they need to protect, grow, and scale. Structural supply crunch. Let's put this in macro context. In 2025 year-to-date, spot ETFs and MicroStrategy combined have bought over $28 billion in Bitcoin. Meanwhile, miners only created around $7.8 billion in new supply. This means that every month, demand exceeds new issuance, not by a small margin, but by a multiple. And since the April halving, this gap has widened. Post-halving, daily BTC production dropped from 900 to 450 coins, yet institutional inflows didn't stop. What does that mean? It means we are operating in a market where the float is shrinking, but demand is structurally sticky. This is how supply shocks happen, quietly, then all at once. Theories. Why now? So what could be driving BlackRock's timing? A few hypotheses worth considering. 1. Macro liquidity. The Federal Reserve has begun slowing the pace of QT, quantitative tightening. That means less pressure on risk assets and more institutional capital looking for asymmetric plays. 2. ETF arbitrage. IBIT's price tightens to NAV. In-kind creation becomes more attractive. Every new IBIT share minted equals Bitcoin taken off the market. Not just exposure, but custody impact. 3. Derivatives setup. After the 1,388 Bitcoin buy print, we saw Bitcoin options skew flip positive, suggesting market makers are now more exposed to upside than downside. That could create gamma-driven spot rallies. So whether it's deliberate front-running or passive demand, the market structure is setting up for potential volatility. Final thoughts. To be clear, $164 million is a rounding error for BlackRock's AUM, but in Bitcoin terms, that's massive. Because Bitcoin doesn't have infinite supply. There's no share buyback, no new issuance at will. And if asset managers like BlackRock, who manage $10 trillion, decide to make BTC a core holding, we're talking about a multi-cycle repricing. The signal here isn't just in the coins bought, it's in who's buying, how often, and how quietly. So here's your question. At what Bitcoin price would institutions stop buying? Drop your take in the comments, and if you want signal, not noise. Subscribe for the next episode of Crypto Alpha Briefings.
This has been your daily institutional-grade crypto briefing from Crypto Alpha Edge. Stay sharp, stay early, stay informed.